Hello everyone, welcome to the Ichimoku.co and Forex Trading TV for the daily FX market review for the trading day ending Tuesday, May 20th. Firstly to the Euro US dollar, and here we see a small black body candle initiating a new first time frame downtrend, making a lower high and a lower low. A candle, however, where the buyers have taken back control of the market by closing up towards the high and certainly well above the midpoint level. Price action rejected from 137.11 resistance and rejected to the upside from the 136.83 level of support. The market has been testing to that level in the recent past and been rejected from there. And the area at 137.11 has held on multiple occasions, as has the area just above there at the bottom of the Ichimoku cloud. We have a bearish market in all three time frames with the Ichimoku indicators, and the checker span here is suggesting that there is downside momentum in this market, suggesting that the next move here could be to the downside, and we're looking for a potential breakout down below 136.83 and then down below 136.45. If we see strong bearish activity below 136.83, it could be the sellers building momentum to breach the 136.45 level. Next, moving to the US dollar Japanese yen, and a slightly larger black body candle today. Sellers have taken control, but once again finding support at the 101.17 level. As with the Euro US dollar, we have a bearish market in all three time frames and supported by the checker span, and suggesting that if we see strong bearish activity down below 101.17, we could be testing the 100.74 level quite quickly. Next to the Aussie dollar US dollar, and following a test to the area around the 94-cent level, we saw the market testing down to support at 93.33 over the previous week, and then for today's trading a very solid bearish close down below the important 92.78 level and trading within the Ichimoku cloud now. So a very strong change of sentiment in this market, giving us a neutral market in big picture terms, whereas we haven't seen this neutrality for quite some time, since the beginning of March, and also a bearish market in the medium and fast term timeframes, and that's supported by the checker span below the corresponding price action. For today's trading that has begun, we are seeing support coming in around the 92.21 level, and that has been an important level in the recent past, so we will be looking for some buying to come in, but we should see very solid resistance up around 92.78 and just below, coinciding with the top of the Ichimoku cloud. Next to the US dollar Swiss franc, and here we've seen the market attempting to rally today on this doji type candle, a candle of indecision, finding resistance at the 89.35 level and above, once again suggesting a very real possibility of a change of trend here with this indecision in the market. At the moment, as this current candle is developing, we haven't tested down below the low, but that is the important area. The low of that candle has finalised trading at 89.10. If the market does trade down through there in a bearish manner, we could see the market testing quite quickly down to the 88.88 level, a previous important level. Now we do have a bullish market in all three time frames, and we have seen some decent follow through after the breakout above the Ichimoku cloud. So this suggests that if we do see a sell-off, 88.88 is the level where we should see buyers come back in, and then the market to perhaps test back up towards this 89.35 level. This bullish activity is strongly supported by the checker span being well above the corresponding price action. Just quickly looking at the Canadian dollar Japanese yen, and after we saw that breakout above the Ichimoku cloud, we saw some follow through, but the market finding resistance around the 94 level, selling off, and now for today's trading closing back within the cloud, and that could be quite important. We are seeing support coming in around this 92.78 level, roughly 92.75, and that coincides with the bottom of the cloud, so it is an important area. If we see a bearish breakout down below, we could see the market trading down to 92.28, but what we'd like to see is some follow through. Typically breakouts from the flat part of the cloud can be false breaks, so that's why we'd like to see firstly a bearish breakout and then follow through to confirm that breakout, and possibly trading down below 92.28 would be the most conservative price action to look for following a breakout down below the cloud. We do have a fairly thin part of the cloud, so if the buyers do find some upside momentum, they could also break out back up to the upside above the cloud, giving us a bullish market. So we have a market here that's really trying to make its mind up with the Canadian dollar, Japanese yen. Next to the Aussie dollar, Japanese yen, and here we see trading within the Ichimoku cloud, whereas the market was previously trading up above the cloud. We now have a neutral market in big picture terms and bearish in that medium and fast term time frame, supported by the Chikas band, and suggesting that we could see this market trading to lower levels. This is a rather large and volatile trading day that we have seen completed today, with the seller strongly in control and strongly committed. So it wouldn't surprise to see a small body candle is starting to form now, and even perhaps the buyers start to come back in, but we should see some resistance around the 94.08 level. If the market does continue trading down, then around this 93 level roughly, we have a previous area of swing highs and swing lows, but also the bottom of the Ichimoku cloud, and we should see some support coming in there. Next to the Euro Canadian dollar, and following that breakout down below the Ichimoku cloud, the rally towards the cloud and the indecisiveness around there, then the strong breakout down below the Kijun-sen and the Tenkan-sen, we have seen the market testing down to the 148.80 level and finding some support down there and just below. It is an important level for this market, and interestingly we have seen the buyers come into the market today closing with control, where it's been quite some time since we saw the buyers take control, but it certainly is likely that the market will find some resistance around this Tenkan-sen where we're trading at the moment. We have a bearish market in all three time frames, and if we do see the sellers come in around that Tenkan-sen, sorry, did I say buyers? I meant the sellers coming in around there. If we do see the sellers coming in around there, and if they can build enough downside momentum for a test to this level of 148.80, we could quickly see this market trading down to the 147.12 area. We do have the Chikas band below the corresponding price action, so it's confirming the bearishness that we're seeing. We are seeing very nice, well-defined downtrending action in a higher time frame here, with the market forming a series of lower peaks and lower troughs. Next to the Euro Japanese yen, and some very solid bearish trading down below the Ichimoku cloud. We had the breakout below the flat part of the cloud. We saw some decent follow through, and then we have seen the market trending down, and still trending down with today's candle on a black body candle. Support coming in around the low at 138.50, so that is an area we should be watching. But looking at the angle of the Tenkan-sen here, it is pointing down very sharply, reflecting solid downside momentum. This is a strongly bearish market, and it does suggest that we will see continued downside levels in this market. The next area of support here is down around, in the recent past, is down around the 136.50 level. Any rally should see the market find resistance around the Tenkan-sen, which is trading at 139.72, or around the 139.50 level, in a previous area where we saw upside rejection from.